What's up, everyone? It's Scotty with MoneyVest. So in this video, we are going to be talking about Oracle, ticker symbol ORCL, and they are going to be reporting earnings next week. So I'm going to break down everything you need to know about this company. We're going to talk a little bit about the fundamental analysis, the earnings expectations, the intrinsic value which we are going to calculate, as well as the technical analysis on this company as well. As always, make sure that you drop a like and don't forget to subscribe to the channel if you're just joining us for the first time. And the link to our Discord and Patreon is going to be down below. Again, there is a first week of the month, which obviously is the best time to join. You get access to all the members-only private videos. These are going to be over here. And of course, Excel spreadsheets, including my watch list, my entire watch list, including my fair values and our volatility spreadsheets. Everything's going to be there. And our Discord access, including trade alerts, trade ideas, find out exactly what I'm buying and selling, and market updates and analysis as well. So everything's going to be linked down below. And also our courses, so fundamental, technicals, options, and psychology, lifetime access to these courses, and do connect with me on Instagram. My handle is going to be CASWRP as well. So Oracle, as we know, is one of the most popular and dominant cloud infrastructure and web services and cloud applications product. Kind of competes directly with Microsoft Azure. We've got Amazon Web Services, we got Google Cloud, and Oracle's products also do include cloud infrastructure, cloud applications, different industries that it caters to as well. So when it comes to size and scale, over $50 billion worth of revenue in 2023, 430,000 customers in 175 countries, more than more than $72 billion in R&D since fiscal year 2012, and over $110 billion spent on more than 150 acquisitions with over 20,000 partners across the globe, 164,000 employees, 18,000 customer support and service specialists speaking 29 languages, and 30,000 implementation consultants as well. 47,000 developers and engineers, 5 million registered members of Oracle's customers and developer communities, and 469 independent user communities in 97 countries, representing more than 1 million members as well. So needless to say that this is a very, very big organization that has done incredibly well over the years, as you'll notice in overall revenues. And of course, since fiscal year 2005 and 2011, the overall non-GAAP total revenue has grown at an over 20% rate. And since 2012, it has grown at over 2%. So it's been a little bit more modest, more linear growth for Oracle. I've actually done a lot of detailed analysis on this company before, so definitely do check out those videos as well, because this is not for the first time we're analyzing this company. It's, again, a very fantastic business, but the growth rate for the future relative to the earnings multiple that it's trading at, that's where the dislocation currently is, in my opinion. Now, when it comes to the overall total addressable market, it's kind of split between application and infrastructure. Application total addressable market they foresee to be $265 billion, and infrastructure is going to be $480 billion. So when you combine, we're looking at just under close to $750 billion in total addressable market between these two categories. And the majority of the Oracle's $18 billion of applicable application revenues is in now cloud, and 63% is going to be cloud, and other rest is going to be on-premise, and that is as of fiscal year 2023, with a huge spike in cloud services as well. And cloud is now over 20% of our $23 billion of infrastructure business as well. So this is basically the contribution mix of how much is cloud versus on-premise, 20% coming from cloud as well. Now, when it comes to the overall revenue, you'll notice that we have seen a very nice increase from 38 billion to over almost $51 billion on a trailing 12-month basis. And of course, gross profit has gone from 31 billion to well over 36, almost $37 billion for the company. And operating income has gone from just under $15 billion to a little bit over 14.3. So we haven't really seen a lot of growth in operating income. Gross profit has grown very, very modestly, like over the last 10 years, and revenue is also up by 2% on a compounded annual basis. So even though revenue's up very, very slightly, operating income and even on a bottom line net income is not up that much. So a little bit under $11 billion to now just under $10 billion for the company. So it's been very, very flat, very, very modest. And of course, earnings per share have grown from $2.42 to a little bit over $3.46. And that's primarily because of the consistent and a very aggressive share buyback program from 4.6 billion down to 2.785 billion dollars in diluted shares outstanding. So it's basically gone down from a very, very significant number down to 2.7 billion, right? So aggressive share buyback for the company over the last 10 years. This right here are going to be the margins. So we are working with over 72% in gross profit margins with EBITDA margins of over 38%, free cash flow margins of just a little bit under 20%. And of course, we've got return on capital, assets, and equity also quite reasonable at 6 to 10%, with net income per employee at $57,000, which has actually gone down from $71,000 per employee as well. So we've got good margins. 72% gross margins are really good. Net income margins is a little bit under 20%, and free cash flow margins are just under 20% as well. But return on total capital assets is actually quite low for a software company, and return on equity is actually not applicable right now for the business. And this right here is the valuation, which is actually quite much more reasonable than I originally thought. 21 to 20 times earnings multiple on a non-GAAP basis. It's actually not that much, and price to sales is trading at a little bit over 5.8 to over 6, and we got price to cash flow at 15 to 17 times. They do have a dividend yield of 1.34% and enterprise value to EBITDA at just over 14 to 19 for the company as well. So that also again is quite reasonable multiples for the company. So I take it back, it's not actually that much. It's quite okay. Now, balance sheet is actually quite surprisingly bad for Oracle. So over $12 billion of cash, with total debt sitting at over 88, almost $89 billion. So you got net debt of $76 billion. I just want to double check that on TradingView as well. So if you go over to ORCL, Oracle Corporation, if you come down, you'll notice, let's just take a look at the balance sheet. Yeah, so total debt's just a little bit under $89 billion. Net debt, $76 billion. Like, what is this company spending money on? No wonder they've done so many acquisitions over the years. So long-term debt is really, really high. Current and quick ratio, both of them are under 1. Debt to free cash flow is over 13. So balance sheet is a big no-no because they don't have a very good balance sheet. They've actually got a very poor balance sheet with, for software companies, actually pretty terrible. Even for a regular company, it's not that great. But for a software business, they can definitely do better. This right here is going to be the earnings expectations, which are not that much. So from $5 to over $8 per share by 2028. So if you do the math, we're looking at a growth rate of just under 10% for the business over the long term. And this right here is going to be those earnings expectations with $1.32 EPS expected and over $13 billion in revenue, with six upgrades over the last 90 days and 13 downgrades for the company as well. So that's really where we are. A little bit under 10%, like I said, is going to be those earnings expectations. So if you come over to Oracle's diluted shares per outstanding, 2.785, and we take that, multiply with this number, so 2.785, multiply that by 5.55, we're looking at net income of just over $15.4 billion for the company. So 15.4 billion is actually going to be a huge jump back up for the company, right? So 15,500, if you plug that number in, and if you assume for a growth rate of, let's say, 8%, because that's really has been kind of like expected growth for the company, 20 times P multiple, I still think relative to the growth rate, it's going to be a little bit higher, but I think we can go with 20 for now. We'll take a look at the sensitivity grid in just a minute. 1.4% is the dividend yield, so I can go with about 11, maybe 10.5 in terms of that discount rate. Now, margin of safety, I'm going to be higher. I'm actually going to go 20% for this because they do have a lot of debt. The balance sheet's not that great. And share dilution, we can go with -2, maybe -3%. Maybe we can do -3% for the company because the company's share buyback program has been very, very active and very aggressive. And we come down to an intrinsic value of about $94. So sub $100 for Oracle is where we end up. And this right here is going to be that sensitivity grid for the business, depending on different growth rates, depending on different P multiples. That's really where we end up for the intrinsic value for the business. And you can, again, take a look at this grid and figure out, okay, what growth rate and what P multiple is appropriate for you and your analysis with respect to where the intrinsic value may end up. So that's where we are in terms of the technical analysis for Oracle. If you go over to the weekly chart, you'll notice that this right here is basically the overall higher highs and higher lows and the uptrending channel within which Oracle's been trading at, right? So ever since the dot-com bubble, this right here has been the overall pattern where it's been kind of following this overall chart and this trend. Very rarely does it come down to this higher low. So obviously that was during the dot-com bubble. This right here was during the great financial crisis. This right here was during the COVID crises. So basically during crises, it comes down to this higher low. And that's exactly what I would be watching, kind of in line with this support and in line with this support. To sub $60 would be a very good deal, in my opinion, for Oracle. But right now, as it stands, obviously it is just trading at a very, very expensive, sort of not really expensive, but from a technical standpoint, pretty elevated level. And a more near-term support is going to be sitting right here at about $100. So previous resistance, as you can see, that we got rejected right over here, and support level is going to stay put right there at close to $100 per share for Oracle. So that's where we are. Hope you all enjoyed this video. Let me know your thoughts down in the comment section below. Again, earnings coming out for Oracle next week. So we'll take a look at those earnings, and I'll do maybe another video update on this company. As always, make sure that you drop a like, subscribe to the channel. Let me know your thoughts down in the comment section below. Do connect with me on Instagram. My handle is going to be CasWRP. Fundamental technical options and psychology courses linked down below. And also do check out the Patreon and the Discord to join our MoneyVest community, get access to all the alerts and trade ideas included as well. As always, happy investing. I'll see you all in the next video.